Hello and welcome to Cargo Shots from the Stat Trade Times. Powered by Group Concorde.
This is Nehal Gautam and you're watching Cargo Shots, where we bring you the top headlines of the week. Qatar Airways Cargo opens Advanced Animal Center. Qatar Airways Cargo opened a new animal center at the Hamad International Airport. The largest facility in the world for live animals transport is spread across 5,260 square meters. It features kennels for 140 dogs and 40 cats. There are 24 horse stables distributed in 4 zones with separate airflows for proper segregation. There are specialty areas designed for day-old chicks, birds, fish, reptiles and exotic animals. Equipped with cutting-edge technology, including advanced heating, ventilation and air conditioning systems, as well as multiple docks for seamless operation, the facility can accommodate up to 47 unit load device positions, catering to diverse animal transportation needs. With the opening of the Advanced Animal Center, the world's leading cargo carrier is setting new benchmarks in the transportation of live animals. In 2023, the Doha-based cargo carrier transported over 55,000 animals, including 10,000 horses. Cargolux records $286 million profit despite challenging conditions. Despite challenging market conditions, Cargolux, the Luxembourg-based all-cargo airline, reported revenue of $2.975 billion and a net profit of $286 million for 2023. With the network spanning over 50 countries and a fleet of 30 Boeing 747-8 and 747-400 freighters, Cargolux faced lower demand levels, increased belly capacity, Russian airspace restrictions, and geopolitical tensions impacting trade. The disruption in Red Sea shipping did not significantly benefit air cargo, with only a marginal increase recorded in the shift from sea to air. Looking ahead, Cargolux has 10 Boeing 777-8 freighters on order to replace its aging 747-400 aircraft. UPS first quarter revenue dips, bets on integrated network for USPS contract. UPS reported first quarter 2024 consolidated revenue of $21.7 billion, down 5%, and operating profit decline of 36% to $1.6 billion. International segment revenue fell 6% to $4.3 billion. For 2024, UPS targets $92 to $94.5 billion revenue and 10 to 10.6% adjusted operating margin. During the earnings call after the Q1 2024 results, UPS CEO Carol Tomé said that the USPS air cargo business fits UPS's B2B growth strategy, leveraging their existing network for efficient integration. Tomé also emphasized their goal to be the top global healthcare logistics provider with their new Labport facility at Worldport. Tomé also highlighted the recent flights between China and Australia, improving connections for businesses in Asia and Europe. American Boeing, DSV and Kuehne+Nagel report first quarter 2024 revenue declines. American Airlines saw a 16% decline in cargo revenue to $187 million in Q1 2024, with cargo yield per ton mile falling 27% to 38.64 cents. Cargo ton miles increased by 15% to 484 million. Boeing's revenue fell 8% year-on-year to $16.6 billion on lower 737 deliveries and 737-9 grounding, while net loss improved to $355 million from $425 million. Commercial airplanes revenue dropped 31% to $4.7 billion. DSV's adjusted earnings slid 26% to $350 million on 6% lower revenue of $5.4 billion. Air & Sea division revenue fell 11% to $3.2 billion amid lower rates. While air freight revenue declined 15% to $1.7 billion, volumes rose 2.3% to around 335,000 tons. Kuehne+Nagel Group's net turnover declined 18% to $6.1 billion, with EBIT at $412 million. Air Logistics turnover was $1.7 billion, with EBIT at $103 million, down 39%. Air Canada Cargo adds freighter service to Chicago. Air Canada and Air Canada Cargo announced the addition of Chicago to its freighter network, starting 2nd of June. The service will operate 3 times per week with a Boeing 767 freighter, connecting Air Canada Cargo's global hub in Toronto with its self-handled warehouse operation in Chicago. Earlier this month, Air Canada announced its partnership with SATS for passenger, ramp and cargo handling services as it plans to resume flights to Singapore's Changi International Airport for the first time in over 30 years. MSC offers nearly $700 million to buy Gram car carriers. MSC Group's subsidiary SAS Shipping Agency Services has agreed to acquire Norway's Gram car carriers or GCC for nearly $700 million. GCC, the third largest tonnage provider in the car carrier segment, operates a modern fleet of 22 vessels with a capacity ranging from 2,000 to 7,000 units. GCC reported first quarter 2024 revenue of $54.9 million, EBITDA of $40.8 million, and a revenue backlog of $794 million. For the full year 2023, GCC's revenue soared 66% to $200.9 million, with net profit surging 300% to $94 million. MSC has offered $24 per share, valuing GCC's equity at around $695 million, and aims to complete the acquisition in the third quarter or fourth quarter of 2024, subject to shareholder approval. AD Ports secured 20-year deal to operate port terminal in Angola. AD Ports Group has signed a 20-year concession agreement, extendable by 10 years, with the Luanda Port Authority in Angola to operate and upgrade the existing Luanda multipurpose port terminal. The group has acquired 81% stake in a joint venture that will operate the terminal and a 90% stake in another joint venture for logistics services. AD Ports Group will invest $251 million over the next 3 years, potentially increasing to $379 million to modernize the terminal into a container and ro-ro facility. The redevelopment will boost annual container handling capacity from 25,000 TEUs to 350,000 TEUs and ro-ro volumes to over 40,000 vehicles by the third quarter of 2026. That wraps up this week's Air Cargo and Logistics News Roundup. Stay informed by subscribing to our YouTube channel for regular updates and visit www.stattimes.com for daily news coverage. We'll continue bringing you insightful analysis and highlights from the dynamic world of air cargo and logistics. Join us next week as we delve into more breaking stories shaping the industry.